Coronavirus, coronavirus, coronavirus. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
I was asleep, Peter, but I think for such a boring introduction. Coronavirus, coronavirus, coronavirus. Can you think of anything else to talk about?
Well, there's nothing else out there. So let's kick off the most important one. Why is the stock market so scared about the coronavirus?
Well, it's like anything he doesn't know about, Peter. What we're scared about, of course, is economic activity coming to a halt because the virus impacts how people work, impacts the supply chain, company earnings fall, companies lay off staff. Does it go for a couple of months? Is it transitory or is it permanent? That's what they're scared about, Peter. So,
but how come they waited? Because coronavirus.
Well, I think
China.
We were talking about this we've been talking about this for 6 weeks. The Yanks, I just think, decided this wasn't going to happen in the United States. The good old US of A didn't need to worry about China, and eventually they snapped there, and then the rest of the world.
I think Italy and South Korea also.
Yeah, I think the spread outside China was what shook them. But look, we had companies like Apple warning about it beforehand, saying they weren't going to get the parts, they weren't going to be sell as many iPhones. That's the type of impact. So we are sort of, I guess, early into the whole. I won't say scare, but the whole thing. And we're going to see this volatility for some time.
Okay, so that's why we're scared. Now, what about the interest rate cuts? We had Australia, Bank of Canada, 25 basis points like us, America, 50 basis points. They reckon that the POMs, there's a 150% chance they're going to cut. That's odds on.
That's odds on.
Winks odds.
I don't know how you get 150% chance for probability, but anyhow.
Paper today, right? I've never seen that before. Anyway, the bottom line is this. Will interest rate cuts work?
Well, look, they're going to help sentiment. That's all they're there for. Look, are there a lot of companies waiting to borrow and consumers waiting to borrow? Probably not, Peter. But look, I guess if the economic growth slows and employment growth slows and casual hours are cut back and people have got mortgages to pay, it takes away some of the pain. So it's not going to do any harm, right? But I think what's important. Governments are trying to signal this coordinated action between governments and their central banks that they're going to do what's required to try to support the economy, and so trying to a bit of a cushion for the shock. So that's why we've seen the central bank so quickly. Reserve Bank yesterday for 0.25%, US Fed overnight with 0.5%, Bank of Canada. They're all going to follow suit, right?
Now the PM on 7:30 report last night said, yes, we're going to do a stimulus package. Now the thing that bothered me this morning, Paul, was it was going to be targeted, tick. It's going to be scalable, tick. But then they said measured. Do we need a measured stimulus package?
Well, I think they're very worried about the old school halls, pink bats.
But it worked! We didn't get a recession in Australia.
I don't know. We can debate that of 2008. I don't think the cash for clunkers, that worked. Although a lot of people, he had a dud car, he got rid of that, right?
Exactly right.
So, look, I guess measured is, it's got to be well spent. And I think, let's see how that pans out. I think we should talk about stocks.
Yeah, but but I just want Josh Frydenberg to channel Arnold Schwarzenegger and come to this economic problem with a big bazooka. If he doesn't do it, basically I want him to be the Terminator to exterminate the problem. If he doesn't do it, there'll be collateral damage. We'll call it a raw deal, and when it comes to the election, there will be a very big memory of what's gone on.
Well, you're going to go for Josh. I think also Trumpy's now getting on board. I think he dismissed it.
Donald.
Donald needs to sort of get his act together here a little bit too. So,
all right.
Look, I mean, that can help with demand. What it doesn't do with the supply side, this is still more a supply side issue because it's the supply side that's the way the things are produced and sold. That's what's being.
But you said China's coming back to work earlier.
Well, I think you asked me, what could turn this around.
Yes.
And I think China coming back to work is probably a big sign.
Tick.
We should talk about the market, how to play this, right?
How do you play it, Paul?
Well, I still think this is correction, right?
Yeah.
Now, what we do know about volatility is it concentrates.
Yeah.
And eventually markets get tired. So, yesterday we had the relief rally, today we'll be down. We're going to be up and down, right?
Yep.
To get used to sort of 2% swings, I don't think we've seen the bottom yet, but I think this is still a market that to look for the quality stocks.
Have you been nibbling?
I had a little nibble last Friday. I couldn't believe yesterday on Monday why it was down 3%. I'm going to nibble again. I've got a couple of stocks I want to buy.
Name them.
I'm looking still at CSL, still at zero. And I still think some of the banks, despite the way they've been beaten up, sure, they passed on the rate cut. There's some value there. I think time's on your side a little bit, but you're never going to pick the bottom. And, just as it can go down 300 points, we saw the US, it can rally 5% in a day. Yeah. So
the bottom line is
you've got to buy what other people want to sell, right?
Yeah, and the history shows once they think the worst of this is over, the stock market roars back.
So let's come back. What could turn around? I mean, there's probably a lot of things. I think one of the ones that obviously everyone would like, the World Health Authority coming out and saying, look, it's all over, guys. Or don't worry about it.
It's dissipating.
Look, that may happen. The chances are the markets will be way ahead of any of that happening, right? Yeah. This is going to go on for some time, and markets preempt. They don't wait for the announcement. They're already getting worked out. The worst is behind us.
Well, by the way, Chris Joy on our TV show said he actually has all his pointy-headed academic people working for him, actually continually watching at the rate of infection and death rates. That's going to drive a capital market.
So some people have taken comfort from what's going on in China. I think China came back to work.
Yeah.
The Chinese authority, they're 2 or 3 months ahead of the rest of the world on this, so they're sort of getting more comfortable about production in China coming back. That could turn it around. Obviously, the market got spooked by the fact that there were infections outside China, so a slowing in some of those could turn it around. And just perhaps a bit more calm. I think markets will say, this is transitory. Look, the mortality rates about this, you compare it to influenza, we don't get excited about this. We'll get through this. But as I said, if you're expecting that an official announcement was when the market's going to buy it, no, the market will already work this out beforehand. So you have to be nimble here.
Yeah, and on the subject of calm, stop buying toilet paper. You won't need toilet paper. It's not diarrhea, it's the flu. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.